Today we'll discuss the top news of the week, what's happening in the stock market overall and in specific companies particular. So get comfortable, and small disclaimer, don't forget to like this video and subscribe to my channel. It helps me a lot to promote my videos. So let me share my screen and let's get started. In recent months, Microsoft stocks has been losing its appeal among investors. Many of them are experiencing, like Bloomberg said, AI fatigue, and looking for better opportunities in tech sector. Microsoft shares has dropped by less than 1%, while Nasdaq 100 index has surged by nearly 10%. Analysis, where is it? Analysis like Jill Laura from D.A. Davidson believe competitors such as Amazon and Alphabet caught up to Microsoft in AI, weakening its leadership position and making it harder to justify its current high valuation. In comparison, Oracle has seen positive results from AI, which has made its stock a popular alternative for investors, offering lower multipliers and bigger growth potential. While analysts maintain a positive outlook on Microsoft, the company is facing a slowdown in its Azure cloud services and other challenges. So now let's look at Microsoft chart. Here we go. And we can see now we at the same levels as in the middle of this year, and even in February of this year. If we compare this stocks with Meta, let's say, you can see, yeah, here we go. You can see Zuckerberg companies looks like more attractive investments over the past year. So we're about 5 years. Also more attractive than Microsoft. Okay. Let's move on. Global indices. I'd like to show you the global index trends so you can better understand what's happening right now around the world. So my main focus is on North America, specifically the S&P 500 and Nasdaq indices, which have brought investors impressive return this year. It's 19% of S&P 500 and also 90% of Nasdaq so far. This is due to several factors, including the pre-US president elections, market rally, and expectations of further rate cuts. But here, what's really interesting, take a look at this over 80% return since the beginning of this year. What is this? It's Argentina's main stock index. Here you can see which companies included in this index, and you can see it's impressive returns. So let's get back. European indices hasn't shown particularly strong result, but anyway, it's all in green zone, especially IBX index and DAX index. It's very good result, and also AEX. That's it. In Asia and the Pacific, so Taiwan stands out with a return of more than 24%, almost 25%, since the beginning of this year. As well as Hong Kong index. Here we go, almost 24% since the beginning of this year. So I still believe it's very, very risky to invest outside of North America. And I keep most of my portfolio in US companies, in US indices, and US dollars, of course, and US treasury bonds. It's not it's not a recommendation, but just be aware of this impressive return, kinda risky investments. So let's move on to the next topic, and here's my question for you. Have you noticed the price of coffee going up recently? I certainly have. I buy coffee beans by the kilograms at the supermarkets and have noticed the price increase over the last year. Now let's look at what's happening in commodities indices. Here we go. We see quite a mixed picture here. The biggest growth has come from coffee, as I said, over 40% since the start of this year. Surprising, right? And what's even more surprising, on the second place of the return is a silver, and silver and gold on the third place. So while I don't recently trade and invest commodities, but I do keep eye on them, as they directly affect my grocery bill, especially with coffee. I love coffee and drink it a lot. Okay, let's move on, friends. Here we go. If you need a financial or investment consultation, please visit my website. It's look like that, alexvoe.com, and fill out the consultation form. It's down below, or you can click here, submit your application, and my assistant will contact you to clarify further steps. I provide consultation in various areas. As you can see, it's financial and retirement planning. I work with clients who are saving for retirement, let's say, or consider to make a large purchase in the future, like apartments and something like that. I also offer education services if you want to learn more about how the stock market works. So let me know. I'm here to help. So and brokerage account, hedging, investments, and trading. So thank you, and let's get back to Bloomberg. Okay. So the next topic is US Treasury bonds. The yield on US 10 years Treasury bonds continue to decline. You can see it here. After a brief bounce over there, they are now trading around 3.73% and are likely to continue falling as the Federal Reserve is expected to lower rates again in the next meeting I guess in early November. And this will put like additional pressure on US 10-year bonds. Let's look at the chart. It's the chart from 1 year. Here's 5 years. Now you can see how low can be interest rates, like it was in 2020, 0.65%. How low can be US Treasury bonds? How low can they trade? So let's move on. Boeing is very interesting companies last month. Boeing is in trouble. They are considering raising at least $10 billion in stock through a new stock offering to replenish their cash reserves, right, which has been depleted by ongoing strike of 33,000 workers. So you probably can see this video from sorry about that, from Bloomberg, right? And the company is working with advisors and consultants to explore its option, but no final decision has been made yet. What does this mean for us, for regular investors? It means dilution of its current shares. Boeing current market capitalization, let's check it here. It is where is it, information? Oh, here we go. $94 billion. So raising additional capital of $10 billion, it means dilution of more than 10%. You will own 10% less than you did before. What does it mean? So I don't have a Boeing in my portfolio, and I generally avoid aerospace and airline companies as they are incredibly fragile and subject to a lot of pressure. So let's take a look at Boeing chart. It should be here. And let's see. It's pretty interesting because it's negative return year to date, right? It's negative return last year, and it's negative return, I guess, yes, it's negative return last 5 years. So if you invested in Boeing company 5 years ago, you will have losses, incurring losses right now. It is not a good investment last years. So if you happen to have Boeing in your portfolio, please use options to minimize your losses, like buying puts or selling calls. So option expiration, yes. There is a lot of options opportunities here in with Boeing. So you can use it to mitigate the risk and lower your losses if you have Boeing in your portfolio. So that's all for today. Thank you until then, and spend your money wise.